Nic Chahine comes in here, we can get his thoughts as well.
Okay, Cisco Systems had been in the trading range, held up pretty well during the flash crash, getting a little pop here. Let's see if it can stay
Good
above.
morning.
Good morning, Nic Chahine. He's an option expert. He joins the show every
Hello.
Tuesday to discuss this week's options outlook. Marketfy Maven, I hope you got a few new subscribers from your show last week. Create income with option spread. Nick, how you doing this morning?
Doing fantastic. How about you guys?
We're doing good. We're doing good here. Well, let's first go a little bit macro here. How would you describe the rally that we had on Friday and Monday? Is that just kind of like a relief rally? Really, no good new fundamental data coming in, but hey, interest rates aren't going up ever, and buy the market.
Yeah, I would. I would compare it to March, like middle of March, when she said Yellen said there's no rate hike in April. So this has the same flavor to it. I knew it would have a couple of days worth of legs because of China. People are like not worried about one of the things that actually started this drop recently. Yeah, I still classify it as a relief rally, and usually I like to short those.
Okay, are you a little under the weather there, Nick? You sound a little. You okay?
I'm I am okay. I'm getting over something.
Okay.
Nothing too serious. Thanks though.
Okay. All right. So let's take here. So was that pop enough yesterday to start looking at things on the short side? You're looking for another continuation. I thought was interesting was we got 97 handles above Friday's low when we got to 1980 yesterday. Pretty incredible.
Yeah, it is. It was pretty violent. If you look up at the action last week intraday on the pop, it was neck. You needed a neck brace for it. The travel on the SPX was incredible as far as from high to low and then back to high and then higher high. It was first the reaction to the bad jobs number was showed maturity. I was like, oh wow, really? The market wanted actually the data to be good in order to rally on good data, and then but instead they reacted negatively, and then before we knew it, within hours they said, no, wait a minute, bad news is good news. So woo, up to But the one scary thing about that is you guys mentioned that you said they're buying the the odd whatever what you call
Dogs.
them, the dog.
Dogs. Dogs are
The,
barking, Nick.
well, that's the scary part because if most of the quote dogs are a perceived froth, if they're buying into Tesla, Twitter, GoPro, and all of these names that are perceived froth, don't send hate mail. I'm saying perceived. Then risk is still alive, and there's no fear. Last week we said, hey, that's one day we've seen actual fear because they sold those dogs really hard, but now they're buying them right back. So the risk still remains that when really the what hits the fan, that premium in the dogs will come out so fast as it came in. So that's the risk. And we've seen this happen in the biotech. You guys mentioned it this morning and before too, that hey, but the problem with the biotechs is they're a big chunk of the market, especially in the NASDAQ. So if as a unit they fall, it's like Apple falling, but they fall faster too. So
Speaking of
that's,
Apple, what do you
yeah.
think of it not participating in the last 2-day rally? I mean, I guess you can say it was up a bit, but really, when you put it in perspective, Apple had a
Yeah.
pretty quiet day on the backs of two incredible S&P 500 rallies.
Yeah, I have a few observations about Apple. Obviously, it is the premier company on the planet. That is, it's arguable, but you can't lose that argument. Anyway, but the point is, it's too eager to test these 107 levels that every once in a while it just pops up. Yeah, it bounces off of them. But it's playing the role of the grown-up in the room. The markets want to rally 2%. Apple is saying, wait a minute, let's look around a little bit. What have we learned today that we didn't know yesterday? Nothing. So it's kind of like I'm using it as the grown-up in the room type of a deal where, yes, it is dragging, but I'm with it. Like, hey, markets, nothing has changed. All we've learned is that we can have flash crashes at any point in time and nothing new. We haven't learned any new fundamental reason to chase the spot or any reason to stay up at the all-time highs or revisit the all-time highs. So this exuberance that came in so fast, I don't get. And I think Apple is the same way. It had a few levels that I was watching that it needed to hold. 113.5 was one, it lost it, and then 112 was the other one, it lost it. And yesterday it peaked to 111, couldn't hold it there. So yeah, it's a great company, but it needs a reason to run. And where's the reason going to come from? And that represents the whole market. Yes, the fundamentals are not that bad, which is one of my arguments. Now, yesterday they were talking about QE on CNBC. Now, I mentioned it months ago that yes, they could talk about QE and that could be a positive catalyst, but the chance for that was like a hair. And now yesterday they're saying part of the rally was based on hopes for more QE on such bad economic news. And I'm saying it's not that bad, meaning it's not bad enough to where Yellen is not only not going to raise rates, she's going to say, I'm bringing in QE. I think that's stepping far ahead of ourselves.
We got just a question from the chat from Bobby. He just wants to know, do you still like your out-of-the-money option positions that you were talking about last week in Apple?
As far as I can't remember exactly, Bobby. I'm sorry, man.
I think we were talking. I'm just trying to remember the conversation too, my goldfish memory. But I think we were talking about like writing, the lower puts there, and we were looking at, that there was premium there. I think when you were looking at
yes,
the 85s or the 80s, that there was so much premium because volatility was higher that you can extract. Would you like to buy Apple at 80? Well, if you would, maybe you should write a put.
Yeah, I absolutely do, because for the same argument, I'm saying nothing has changed fundamentally. Therefore, Apple is still worth what it was worth last week. So, yes, technically it could come down to 90 or whatever if it loses 105 and then 100. But, at that point, how many buyers will step in? Short of the markets, all the markets falling apart, and at which point everything is falling apart, we have bigger problems. So, yes, for the same reason I'm saying don't chase these markets up, I'm saying that Apple's a great deal with the same logic that I said. If you're selling puts to own it at 80 or 85, or selling credit put spreads that are out in time down in the 80 level, yes, I still like them, but I still monitor them, and I'm not above saying, okay, I was wrong. I will defend whenever defense is necessary, and like I've been saying for the last 2-3 weeks for all my members, that use all these upside to book some profits in some longs that you've had, and to also shore up some longs that came under fire during the flash crash, because we don't know if we're done with that. And if we're not done and we come back to it, wouldn't you feel bad that, hey, man, I had the opportunity to shore up my portfolio and lock in my gains, and I didn't?
Nick, coming out of the chat here from SF Bright G. Nick, do you think the China markets reopen will give us the downward pressure again? I think they were closed for a holiday or for a day, or they closed for a whole week. What's your outlook on China?
Well, China is part of my thesis, obviously a big part of the global thesis, and it's been the same for years, and it hasn't changed. It's a big question mark in regards to the actual growth, where they're going, what are they able to do, what are their intentions. So it's always a question mark, and it's always in this case. I think it has more potential downside than upside, because if they say they're doing a QE, it's got we've seen the effect get smaller and smaller on these announcements from them. And I'm not sure how directly it impacts us here, but we seem to want to rally on that. So yes, China is a source of trouble as far as headlines, potentially. But it's still a question mark. So nothing has changed. I always say that. I know it's boring. I know it's repetitive, but really, really nothing has changed in the global picture. We still have the same things. China's a question mark. We still have problems in Europe, although they're growing a little bit. And we still have QE in Europe, and it could be growing, but I'm not sure how they're going to do it. It's easier said than done. The U.S. is doing okay. The recovery is not as great as we wanted, but it's still okay, even though we've had a few economic reports that are contradictory to that. So all of these things have been in place. Japan is still what it is, and nothing really has changed. So what I do is I leave some room for upside, and I do the credit call spreads to carefully short, and then on some downturns, I take a few longs in order to balance out the portfolio. And that's all I've been doing. And it's basically your iron condors. If you know what those are, so basically you take a long position and a short position at about the same thing at about the same weight, and you space them out evenly from current price or according to your thesis, and then you get paid on both ends while nothing happens in between. And that's my take these days. So any pops like these, I add to my long shorts that are long distance. And if we drop a little bit and I need some longs, I take a few longs.
Okay, it's a good strategy. Speaking of China here, Alibaba gets a nice move off the all-time low here. Too much in the move to chase it here. What's your thoughts on Alibaba?
I'm not tending to chase anything, but it does have an opportunity here. If you draw a short-term connection between the
I
a
see him.
couple 3 points, you get that this, if it gets another upside day, it could potentially get to 70 or 72 just based on a technical basis. Um, I don't like the fact that it's dropping precipitously from wherever it peaked. And I don't like the fact that it's tied to China. So any bad news from China will reflect badly on Alibaba as well.
All right.
Um,
You got to help me out here on this crude oil here. I mean, I looked at some of the USO options. Not a lot of juice in here, but how do you take advantage of this long period of consolidation without trying to pick the direction here, Nick? Or is this the way it's going to be for the next couple months in the crude trading range?
I said crude. I said it jokingly, but it's totally true. It's a rigged market, and it's completely in control. OPEC is completely in control of the price, and I don't know how you can trade it because you can play it lottery style, but the fundamentals zero, absolutely zero impact on price right now because of what's going on with the rhetoric and whatever is going on in OPEC. And so how can you invest money? I would not put my family's money into that. And I hear people, experts going out there and forecasting based on fundamentals. And I'm thinking to myself, what? Their fundamentals have almost zero impact on the price right now. Whatever fundamentals are, we'll figure it out after this, quote, war ends, this economic war ends between OPEC and the Western nations. And the fact that it's mired between 47 and 44 tells me that it has a potential to break out from there, more so than break down from there. And yesterday, maybe we've had a good thing. I thought yesterday OPEC lowered prices, yet crude rose higher. So maybe that's, when you can go up on bad news, maybe it's a sign that, okay, they don't want to go too far lower than this. But they actually put investment money in there, like good size trades. I can't do it.
Nick, thoughts on Twitter? They've officially got the jack now. We had a little bit of sell off there, gave back the rally, but then it popped big time in the afternoon. We've had a nice run from the 24.5 area that it was at just two trading sessions ago. Thoughts on Twitter here now that Jack Dorsey is official?
The Twitter long term, I like it as an asset. Short term, I don't put a lot of money into it. So I do have a debit call spread in it. I paid like 9 cents for a 30/31 October call spread. So I bought the 30, sold the 31 as a lottery ticket. And now I think it's like 15 or 16 cents. So I'm sitting on it and see where the next headline will take me. If anything, I'll probably cash it in. It's not a lot of money, but it's a moral victory, and reinvest it out in time. And in other words, roll it out, because October only has 11 days left in it. And if they don't get to the 30, that asset dwindles in value because options, time is the enemy of long options. So I would want more time on the clock. So the way I would play Twitter, if you believe in it long term, is buy some long-dated calls or call spreads, and that could make you long the stock with not a lot of money.
Moving on here, Tesla getting a
Mhm.
price target cut here. Stock just hasn't been acting great here, especially in a strong market yesterday. Any reason to dip your toe in Tesla?
Absolutely not for me. I do not like the company the way it's valued right now. In fact, I did an experiment last week where when they quote launched Model X, for me a launch means there's a car on the ground that drives away, and this one they have like 3 or 4, but you can't buy it now, so it's not a launch. But anyway, if I didn't like it aesthetically, and I jokingly put it out on Twitter that it reminded me of the Aztec Pontiac. And I got hate mail right away. Well, not hate mail. I got the challenge on that statement. And then a day later, or maybe even the same day, I wrote an article making my point as to when you buy overvalued companies that are priced for perfection, it's different from one growth company to another. I don't have a problem with Tesla not being profitable, but I do have a problem for its prospects down the line. Everybody ragged on Amazon for not being profitable for a decade or however long it was, but the difference was that Amazon in one quarter could have been profitable just by not spending foolishly, because it was making tons of cash and money, and it was just spending it to grow, and they were growing. And a growth company, you don't evaluate it on its bottom line, you evaluate it on its top line. In Tesla, they can't even get to profitability within the any foreseen future. They have subsidies for them, subsidies for their clients that buy their cars, subsidies for the people that want solar panels on their roof in order to charge their cars, and they still can't make money. They can't grow because they're physically tied to one plant that can't host the capacity that they're going for. So all in all, everything has to be more than perfect for Tesla to grow into its price. Unless they discover some new technology that brings them a huge new income source, I don't like the company, so I would short it very cautiously.
We've been on the line with Nic Chahine. He's an option expert, joins the show every Tuesday to discuss this week's options outlook. Marketfy Maven and the author of Create Income with Option Spread. Nic, I'm going to miss you for a couple weeks here, or actually just next week, but I want you to take it easy on Brianna and Dennis while I'm gone.
I sure will, and thanks again.
Okay, Nic Chahine.